Today, major cryptocurrencies are in the red, the day after Fed Chair Powell says another rate cut in December is not a foregone conclusion. JPMorgan says Circle's USDC is outpacing Tether's USDT in on-chain activity. And Canary Capital CEO McClurg breaks down how the asset manager's new spot crypto ETFs tied to Litecoin and Hedera are performing. Welcome to CNBC's Crypto World. I'm Katie Tarasov. Major cryptocurrencies pointed lower one day after Fed Chair Jay Powell suggested the central bank may not cut rates again at its December meeting, which investors had been betting on. As of noon Eastern, Bitcoin fell by nearly 3.5% to the $107,000 level. Ether dropped 4.5%, and Solana's SOL token fell nearly 6%. The moves lower come after the Fed lowered the federal funds rate for banks by a 0.25 percentage point yesterday afternoon, as expected. Okay, let's talk about the top stories. Circle's stablecoin USDC overtook Tether's USDT in terms of on-chain activity. That's according to a note from JPMorgan out yesterday, which pointed to regulatory advancements as a major reason why. Analysts at the bank wrote that as regulatory frameworks for stablecoins become clearer, tokens that comply with these standards, such as USDC, are experiencing a notable increase in on-chain transaction activity. The note said that in contrast to non-compliant stablecoins like USDT, Circle's stablecoins market cap rose 72% year to date. That significantly outpaces USDT's 32% growth rate over the same period. Analysts also noted that USDC's transparent reserve management and regular audits make it more trustworthy among institutional investors and other regulated entities. They also said that USDC's compliance with frameworks like MiCA in the EU sets it apart from competitors, making it the preferred stablecoin for financial institutions. The analysts did, however, point out that outside the U.S., Tether's USDT continues to dominate in terms of market cap and liquidity as it serves as a primary trading pair, particularly in emerging markets. Sticking with JPMorgan, the bank tokenized a private equity fund on its Connexus blockchain platform for private banking clients, another move in the bank's embrace of tokenization. The debut of the new blockchain-based tool streamlines distribution and servicing of alternative investment funds. JPMorgan says this tool enables alternative investment managers to deliver greater efficiency and real-time transparency for clients, as well as distributors. This is a precursor to the broader launch of what's called Connexus Fund Flow, which allows for real-time settlement of private fund flows using tokenized investor data. JPMorgan entities, including Connexus, the bank's blockchain unit, joined fund administrator Citco in its first live transaction. In a statement, the head of wealth management said the ultimate goal is to use this technology to improve the experience and outcome for investors, and that beyond efficiency gains, Connexus is actively working towards a future where alternatives can be accessed with minimal cash drag and operational burden. All right, turning to spot altcoin ETFs for our main story. This week, more spot crypto ETFs came to market in the U.S. That includes those tied to cryptocurrencies like Solana's SOL token and Canary Capital's spot ETFs tied to Litecoin and Hedera. Crypto World's Jordan Smith spoke with the asset manager's CEO, McClurg, about how those spot crypto ETFs are performing.
I want to start with the news of the week for you guys. These new ETFs, both Hedera and Litecoin coming to market. They're more niche than maybe, say, Bitcoin or Ether, but this is a time when we're seeing more and more crypto ETFs come to U.S. markets. Why was right now the time to bring them into the market and to list them?
Yeah, absolutely. So first of all, Litecoin was one that we really wanted to bring to market, given all the updates and changes that were made to that particular token. Litecoin was and always has been and still is digital silver. And it was designed to be the silver to Bitcoin's gold, made for smaller transactions, faster transactions, and cheaper transactions. Something to be used for everyday spend as well as utilizing in emerging markets. And we wanted to bring that to market as fast as we could. We believe that Litecoin had very similar characteristics to Bitcoin, which made it not a security. We even had engagement in Litecoin during Gary Gensler's reign, which is really interesting. And then we got held up a little bit once there was a change in the change in the SEC. But we wanted to bring this as soon as possible, given its importance in the market for smaller transactions. HBAR we felt like was really interesting because You've got Bitcoin, you've got now Litecoin as well, which is money. You've got Ethereum and Solana, which is more protocol transactions, but HBAR is the largest enterprise transaction software. And it's really not even a blockchain, what other people might think about it. It is a cryptocurrency, but it is a different type of information gathering input output system. And we wanted to bring that to market because it's been utilized very broadly in enterprise for years. And it was important to bring that to market pretty early, given its importance as number one, a top 20 token, but also as the top enterprise token. So we thought it was important to bring it as soon as the SEC released their generic listing standards, which was about a month ago, which included both of these tokens.
Can you talk a little bit about what a metric for success looks like for both of these? I mean, like I mentioned, they're more niche than some of the the mega cryptocurrencies that everybody thinks about, and it appears so far they've seen pretty muted trading volumes. Talk about what you're looking at in terms of success. What would it mean for Canary for these to be ones that stick around?
Yeah, absolutely. So in my previous company, we launched the first NASDAQ traded Bitcoin futures ETF, and day one, $100 million, simple, right? And that's Bitcoin. It's very well known. Ethereum is also very well known and old out there. It's been out there for a while. We didn't expect these two to get the kind of volume that Bitcoin and Ethereum got, but we do feel like that they've been very successful. HBAR, for instance, the ETF has been putting up very strong numbers as far as trading volume. If you look at the broad universe of ETFs, not comparing it to Bitcoin or Ethereum, it's put up very strong numbers in the world of ETFs. We've seen about $8 million of volume a day, which is fantastic for a brand new ETF. As a matter of fact, even yesterday was the premiere of the second Solana ETF, which is a much larger market cap currency. And the trading volume for HBR was actually higher than that Solana product. So we're actually seeing it's actually greater than what we expected for that. But we do expect these to be more of a marathon, not a sprint. As people learn about them and hear about them, we do expect volume to continue to stay constant. I believe today we've already hit 40 million in AUM for HBR, which is a massive win, in my opinion, given that these are not top 5, but top 20 tokens.
I'm curious if you see digital asset treasuries as sort of competition for these ETFs. Well, that's the big theme for this year, all of the different companies coming around to buy up digital assets. Is that competition? Do you see that as something else? What's your take there?
Yeah, what I'm seeing in the Venn diagram of things is that there's probably only about 10% overlap of who the investors are in DATs versus ETFs. So we don't expect it to cannibalize us much. There is of course other Litecoin DATs that exist already, and we do believe that it has probably cannibalized Litecoin a little bit. There is not one for HBAR, which I believe is one of the reasons why HBAR has been a little bit stronger. But broadly speaking, and in the long run, I do believe that this is going to take a while. But I do want to go back to when ETH futures first launched. So we were, again, my previous company, we launched, the first ETH futures ETF, and there was only $5 million day one. And then over time, it really started gaining momentum. And then even ETH spot in the first couple of weeks was pretty muted, and it took a little bit of time for the market to get there. Bitcoin is something that people have known about and have studied and have done due diligence on for years. And when it finally came to market, it was massive. Every other token outside of that is going to take a while. So again, I think that this is going to be something where people learn more about what Litecoin is and what HBAR is. You'll start seeing more inflows there. But I don't think DATs are going to be a massive hindrance to what ETFs do, because they're so different.
While I have you here, I also want to get your reaction to what's going on in the crypto market in terms of prices. We've got big tech earnings coming out right now, and we're seeing this rotation out of tech stocks on Wall Street. You've got the Fed cutting rates yesterday, and also at the same time, you've got trade negotiations happening with the U.S. and China. Is there one big catalyst to watch for crypto here, or is it sort of compounding factors from all of these things that are happening in the moment.
Yeah, I think crypto is getting a lot more mature. So you're not going to see the volatility size that we did in the last few cycles. I don't even know which cycle this is for me. Maybe it's the fourth one that I've been through, but I'm used to seeing Bitcoin going up and down by 30%. And when 2% and everybody freaks out, I'm like, what? 2%? What was that? That's that's a Friday afternoon, right? So I do expect as maturity sets in, and ETFs is actually helping, right? Because you have more institutional investors in larger amounts of money. You've got the law of large numbers affecting some of the volatility as well. So the percentages that a lot of this goes down and up isn't going to be as great. I think a lot of people were expecting a big blow off top in Bitcoin this year. I've heard numbers of $1 million, $250,000, $200,000. My target still remains at 140,000, which is a target I set about a year ago. I could be wrong. I don't know. But what I look at when I'm looking at Bitcoin and other cryptocurrencies for price is I'm looking at global monetary supply, or global M2. And right now, based on where global M2 is, I'm still seeing a Bitcoin price target of about 140, maybe a little higher based on some of the actions of the Fed recently. But what the Fed has done recently, I actually don't agree with, but it's what's happening. They are continuing to lower rates, which I do agree with, but they are going to begin to stop unwinding the balance sheet December 1st, which I don't agree with. I think that we need a much more normal curve. And as rates go down, we're going to get a curve that's not inverted anymore, because that's more the low end. But if they stop unwinding the balance sheet, what would possibly happen is that long end starts coming down too, which means that 10-year could go, could stay below where the Fed funds rate is, which isn't good for bond investors and isn't good for the broader economy. I would like to see the Fed continuing to unwind the balance sheet while lowering rates to get a normal curve again.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.